Thursday, December 3rd, 2020, Monaco 64, home of alternative economics and contrarian views. So today we're going to look at how governments rip off the public with statistics, how they fiddle with statistics, how they change methodology. And I'm going to use the US example of the US. Not that in the UK they don't do the same thing, but I follow someone on Twitter. Twitter handle is High Heat or at 2020 Upstream. You can follow him. He tweeted yesterday, was just notified of my 1.3% COLA allowance from Social Security. So what's COLA for those of you who are not in the US? Well, it's a cost of living adjustment. So COLA, it's not Coca-Cola or Pepsi Cola. Yeah, we will see using John Williams' shadow stats how people are losing out. We're also going to look at some Federal Reserve Board distribution financial accounts data, especially with what's been written by Ray Dalio recently, that he expects that we could have some kind of social upheaval, a civil war, or even revolution in the US. I'm not saying I agree with him. It is possible. After all, we are probably in the middle of the fourth turning. There's a book written many years ago by Strauss and Howe about the generational theory of the fourth turning. And they argued that, for example, the first turning for the United States as an independent country was around 1780. So if you add 80 to 1780, you get 1860, you got the Civil War. You add 80 to 1860, you get 1940. You had the Great Depression, World War II. And then you add 80 to 1940, you get 2020. So they wrote this book back in the late 90s, I think, or early 2000s. I remember one of my good clients that was actually based in the US telling me about this book. I didn't read the book, but I know quite a bit about the theory. So yeah, that's why I'm going to look at these data from the Federal Reserve. Before that, let's look at the markets and precious metals. They're rebounding very quickly, which is a good sign. I'm not giving trading advice, but I would say that for those people who were waiting for precious metals to correct so that they could go out and buy the dip, and by that I don't mean paper gold, but physical gold and silver, I think they've missed out unless they were able to do it in the last week of November, because from the 23rd of November to the 30th of November, gold dropped in dollar terms from like 1870 to 1760. Yeah, if you were able to buy late last week when gold bottomed or earlier this week, yeah, you're doing well. If you didn't have to pay too much premium. And I had a look this morning at the premiums here in the UK from the major dealers that I look at. You might have some that have lower premiums, but these four that I chose are pretty big dealers, reputable dealers. First one is Atkinson's. Their premiums for sovereigns, 6%. Yeah, you might get less for Britannia's, but sovereigns are really great coins to own because they're just under a quarter of an ounce of gold, and they're the most popular, I would say, for people who save in precious metals, especially here in the UK. So ATS Bullion, who recently had some really low prices prior to the correction, their premium right now is up to 7.3%, and they're out of stock as well for quite a few coins. I think they have, like, for example, Atkinson's only has the 2020 in stock, and their website is saying that it might take 1 or 3 days not to ship it, but just to process your orders because they're so busy. So that's the way the physical market is right now. Very tight, it seems. Bullion by Post, who are quite big and they advertise quite a lot on the internet. Their premiums for sovereigns is 7.3. And last but not least, Gold Investments, who I have a promo code with Oliver Temple and Simon Temple. Their premium is 5.8%, just a little lower than Atkinson, pretty much the same. And if you are looking to buy precious metals here in the UK, yeah, use my promo code with Gold Investments. It's Maneco64. They'll give you 0.5% discount as well off the price. And they will also try to match another price you're getting from another dealer as well. So yeah, the details for Gold Investments are below in the description. I also have a referral code for Glint, of course, which is slightly different. You own physical gold, but they store it for you in Switzerland and they give you a MasterCard to spend with. So let's get on to the markets then. So right now it's 8 o'clock, 8 a.m. London. We got spot gold at 1842. It's up 12. We're right near the highs of the session, overnight session, morning session in London. Low has been 1825. Months ago, before we even broke through 1800, I said that the 1825 level was very important level in terms of longer term perspective, because that was the highest quarterly close ever for gold, even in 2011 when gold went up to 1920. And I said at the time, if we're able to close above 1825, that's very bullish, and it turned out to be. So that's a really important level, and it looks like we've gone right back up through this level very easily. It doesn't mean to say that we couldn't turn back south, but as you've seen, the physical market is very tight. You're still paying quite a bit to get the real thing. It reminds me of October, November 2008, when gold dropped from $1,000 to like 680 during the Lehman crisis. And I remember back then, premiums were over 10% here in London to buy any kind of physical gold. And lo and behold, a few months later, we're back up above 1,000 in gold. I think we're going through the same kind of scenario here. I know the miners yesterday didn't do that great. They dropped a little bit. We'll have to see what they do today, though. What about silver? Silver's been underperforming a little bit. It's catching up, but it's actually just matching the percentage increase in gold right now. We're at 24.20, up 14 cents. The Dow future is up 20 points at 29,900. S&P is unchanged. NASDAQ is up 20 points, NASDAQ 100 future. What about the currencies? Well, the euro continues to move up. We're at 121.34, up about 0.2%. The pound is up 0.25% at 134 exactly. Dollar versus yen, dollar's down 0.1%, and the dollar is unchanged versus the yuan. So the dollar index continues to trade lower here. Crude oil, WTI crude is up 0.33% at 45.50. To finish off the 10-year yield, bond yields are picking up. We aren't changed overnight, but we are at 0.94. Recently, we got up to around 1% a few weeks ago. Some people would say, well, higher bond yields would be negative for gold. Well, back in the 70s, we had a bear market in bonds that started out a decade or so before, and gold went up. I think the trick for bond yields is whether they go up enough to cover really the real cost of living increases. And that's where we come in now with COLA. So yes, after I saw this tweet by High Heat here about the 1.3% COLA allowance increase. I wanted to have a look because we've looked at John Williams' shadow stats before. I don't subscribe to shadow stats. I have in the past, so I don't have access to the exact numbers. So just looking at John Williams' chart here of the CPI, which is the Consumer Price Index, which is a reflection, of course, of inflation. Even though people use that term very loosely, they say that the CPI is inflation, but let's say it is inflation, okay, the CPI, even though you know that I always stick to the original or classical definition that inflation is the increase in the supply of money and credit resulting in higher prices. But anyway, the way they calculated it back in 1990, if you look back to 2015 till now, it's been basically between 4 and 6%, a little lower, a little higher. So let's say 5% has been the average. And you look at the 1980 calculation methodology that the government used to use. So these alternate numbers are all government numbers, the way they used to calculate it before they changed and tinkered with the statistics. So for the 1980 methodology, you can see from 2015 to 2020, we've been between 7.5% and just above 10%. So I took an average of 9%. So what is COLA? Well, it says here, this is from the Social Security website, cost of living adjustment information for 2021. Social Security and supplemental security income benefits for approximately 70 million Americans will increase by 1.3% in 2021. So they use the increase in the CPI for a certain period, and they come up with this number. I think it came out yesterday. So I had a look through the data, the COLA increases for the last 7 years, including 2021. So we have 1.3% this year. Last year, it was a 1.6% increase. 2019, there was a 2.8% increase, which was quite nice. 2018, 2%. 2017, 0.3%. So not a very good increase there. And 2017, you might think, oh, that's Trump. No, that was decided just before 2017. So that was under Obama, right? And then 2016, guess how much it increased? 0. So no change. That was under Obama. And I'm not trying to defend anyone because I think none of these presidents in the last 50 years or 30 years have done anything to make it a fair system. They've played right along with these statistics, with the way they measure it, with the way they rip off the 70 million Americans, and I'll come to that in a minute. So 2015, there was a 1.7% increase. So I've done the average for the last 7 years. It's just under 1.4%. It's 1.39%. So I use this inflation calculator, Save Enough to account for inflation. So basically, the first example here, I took the 1990 methodology of calculating CPI from John Williams, which is roughly 5%. I subtracted 1.39% from it, which is what people have been getting for the last 7 years in COLA adjustments. And that will give you how much they're ripping you off by, really, under the 1990 methodology. And that's 3.61%, really. That's the ripoff. So if you had $1,000 that you were earning from Social Security, I don't know how much Social Security is, but let's say it's $1,000. Well, in real terms, you're only really earning $780 now compared to 2015. Is it any wonder that Ray Dalio is writing about wealth inequality and the fact that people are getting angry? So that's a decrease of 22% really in what Social Security is really providing to you compared to 2015. And if you look at the 1980 numbers, which we saw was averaging around 9% since 2015, well, that's even worse, of course. You subtract 1.39 from that, you get 7.61. So really, your $1,000 equivalent from 2015 is just under $600 today, which is a drop of 40%. So just to finish off, let's look at these Fed data. It's actually from the Federal Reserve Board of Governors in Washington, D.C. It's the distributional financial accounts. And you put that together with what Ray Dalio was writing about, wealth inequality, the COLA adjustments that affect the bottom, I would say, 70 million Americans. So if you go to the third quarter of 1989, we see that the top 10% of Americans, which is the top two numbers here, they owned just over 60% of the wealth, 60.7%. And the rest, of course, was owned by the bottom 90%. And notice how the bottom 50% owned 3.7% of the wealth. And now if we go to the latest numbers, which is for the second quarter of 2020, you can see that the top 10% are almost up to 70%. They are exactly at 69%. And more importantly, notice how the bottom 50% share of the wealth basically has halved since 1989. It's at 1.9% from being around 3.7% back in 1989. So that's how it's changed. And that's why Ray Dalio was writing about that. And I would say also the cost of living for a lot of people is going up because they're not really calculating the real increase in cost of living. They keep saying to the public that there is no inflation, but of course the general public know that there is inflation and that prices are rising. Of course, the people at the top 10%, they're doing very well. They can protect themselves against inflation. A lot of them are corporate, let's say, officers or executives. They've got a lot of their income tied up to the stock market. So you can see why the Federal Reserve now wants to keep rates low, pumping up the stock market. It only helps really the very top. And I think that's why America is so divided. And it's not only America, it's the whole of the Western world. Here in the UK, in Europe, we've seen the yellow vest protest. We've seen the situation in Southern Europe as well. Things are not great. The middle class is being eviscerated, and it's mainly because politicians, the economic class, the central banks, the people who run our system, they're ripping off the public. And until people realize this, they're going to get shortchanged. They're going to keep getting shortchanged. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Twitter, Parler, and all these other platforms below here. I wish you all a great day. Take care. Bye.